And so that is where we're headed. That brings us to about 3,050 for gold. And so we still have some pretty good upside potential from where we are. That is about a 5.5–6% move. And gold to me is kind of the ultimate play at this point when we're in a late stage of a stock market where I think the stock market and the economy getting very close to a top. This is when we see gold come to life. And gold has been rallying and leading the way for the past year or so, just kind of flying higher. And so this is a good sign. The more gold moves up, it actually tells us we're getting, I think, closer to an economic reset, a financial reset.
Gold could rise to around $3,500, offering a 5.5 to 6% upside. As the stock market nears its peak, gold is emerging as the top investment. Its steady rally signals a potential economic and financial reset ahead. ChrisVermeulen, chief market strategist at the Technical Traders, is renowned for his technical analysis and market forecasts. He explains that gold is in an intense breakout phase, moving through several rallies and pauses. Using Fibonacci extensions, the following key target is around $3,500, indicating a 5.5 to 6% upside. Recent price action suggests continued momentum, with gold acting as a haven as the stock market nears its peak. Its steady rise signals a potential financial reset, making it an attractive asset. ChrisVermeulen highlights that investors are turning to physical gold as a hedge against economic instability, banking risks, and market corrections. Unlike silver or mining stocks, gold remains the preferred store of value globally. With increasing demand and large physical gold transfers, it remains the safest play in the precious metals market. As we present clips from the video, please like this video, subscribe to the channel, and turn on the notifications bell to be instantly notified every time we upload a video. Thanks for the support, and enjoy the video.
I think it's going to push up still quite a bit higher. In fact, if we take a look at the charts, and gold is on a breakout. So gold has gone through a series of stair-stepping price actions higher. So we've had rally and pause and a series of these big rallies and pauses. And now we're starting at the next rally phase. And just based on the momentum here, and if we use Fibonacci extension, which is one of my favorite technical tools, we can get a gauge of how strong this upward momentum is, where price should pause, where it should hit the next key target. And so we can figure that out by understanding how strong this last rally was, the strength of the pullback that we saw back in November. And then we can project that forward to where we think that price or where price is now. And so more or less, there's two key levels when we look at gold and using Fibonacci extension. And the first one here is a 618, meaning 61% of this rally that we saw previously is going to be the first area where it starts to chop around and struggle a little bit. It hit that price level 2 days, had some big pullbacks from that level. Now it's kind of broken above it. It came back down and tested this level. And that is a good sign. When something shows a little hiccup on the chart at the 618, we almost always go up and hit the one level, which is 100% measured move, meaning the strength of the first rally will be the same percentage-wise or same move on the second rally. And so that is where we're headed. And that brings us to about 3,050 for gold. And so we still have some pretty good upside potential from where we are. That is about a 5.5–6% move. And gold to me is kind of the ultimate play at this point when we're in a late stage of a stock market where I think the stock market and the economy getting very close to a top. This is when we see gold come to life. And gold has been rallying and leading the way for the past year or so, just kind of flying higher. And so this is a good sign. The more gold moves up, it actually tells us we're getting, I think, closer to an economic reset, a financial reset. And gold is kind of that global barometer where everyone around the world sees it as a way to store value and to get out of the stock market, to get out of real estate, and to keep your money out of the banking system because they could go bankrupt. And that's why physical gold, I think, is doing well, is because people are they're preparing for what could be another big, market correction. And there's a lot going on with big money or big gold, physical gold moving to the States. I think that's got people rattled as well. So I like gold. I like it more than everything else in the precious metal space. I like it much more than silver. I like it a lot more than miners. To me, gold, physical gold is the play right now.
In a crosstalk with Elijah, ChrisVermeulen exposes that silver has shown strong rallies and pauses since 2023, but remains highly volatile and unpredictable. While it has rebounded from long periods of underperformance, it still lags behind its historical highs. Silver has the potential to reach $35 to $37 in the short term, but its choppy nature makes it challenging for short-term traders. Gold, on the other hand, tends to lead the way, with silver following later. ChrisVermeulen suggests that gold is safer as a financial reset looms. Gold holds its value better during economic uncertainty. While silver may see steep corrections of up to 60%, gold will remain more stable. Once the market resets, silver could offer substantial buying opportunities at lower prices, making it a better long-term play after a significant downturn. ChrisVermeulen discusses that the stock market appears to be in a key topping phase, losing momentum as poor earnings and weak non-farm payroll data emerge. Major stocks like Nvidia and the semiconductor sector are struggling, which is concerning since they are significant in driving market indexes. While the S&P 500 could still push another 5% higher, overall market strength is fading, and signs indicate a potential slowdown ahead. Despite recent corrections, the market is forming a bull flag pattern, suggesting one more rally before losing steam. If the market breaks to the upside, it could attract more investors, similar to past cycles. However, this surge may be short-lived, as underlying weaknesses indicate the market is running out of momentum and could be nearing a peak.
If we take a look at the silver over the last couple of years here, from 2023 on, it's had a really nice move. As you mentioned, yeah, it's similar. It's had a series of kind of rallies and pauses. We've had a rally up, a big pause, another rally. We're kind of in a big pause. Now, silver is a lot more volatile. It's a noisier, it's an uglier chart. It works well when you're on the right side and it takes off, but it's a chart that's will shake you up. If you're a short-term trader trying to get in and out of precious metals, silver make you pull your hair out. But it does perform exceptionally well. Gold typically kind of leads the way. And then we'll see silver kind of kick in, usually a little bit later. Now, when we zoom out, obviously, on silver long term, it's nowhere near the highs that we've seen in the past. It has definitely turned a corner. It was out of favor for a very long time. And really, 2020 is when it kind of came to life. It's carved out a bottom, and it's building a launch pad to go higher. I think we could see silver go back up to about 35, maybe even like 37 and a half, somewhere in there, potentially over the next month or so. But overall, it is a real volatile one. I think the safer play is gold, simply because I do think we're going to eventually get into a market reset, a financial reset. And I do think we'll see precious metals get into a little bit of selling, and gold will hold up way better than silver. So I think from an investor standpoint, gold is the play to be in. It has upside. It's going to hold its value a lot better. And then if and when, which I think it's more so when we have a market financial reset, then everything's going to reprice a bit. Silver is very volatile, so it will actually correct severely. It could be 30, 40, 50, 60%, like it did in 2008. And then you've already, gold will hold its value a lot better, but then you can invest in silver and accumulate and start stacking it at a really good rate. So to me, with what's going on in the world, I think gold's going to hold up the best, has more upside and a lot less downside. And silver becomes the investment later when it's more or less feels like it's on sale at a sharp discount. Yeah, we are. The market is slowly getting weaker in the grand scheme of things. I believe we're in like kind of a key topping phase. I think we're very similar setup to kind of what we saw back over here in terms of we're running out of momentum. We're starting to see a lot of poor earnings. We're starting to see, non-farm payrolls weren't very good this week. We're starting to see a little pressure there. So overall, when we even look at the semiconductor space and Nvidia, some of these big powerhouses, they're running out of steam. They've lost their upward momentum. They're not participating. They're not really even leading at all either. So that's not a good sign, because they carry a good chunk of the weight of the stock indexes. So I do think the markets have room to push a little bit higher. I think the SP 500 could push maybe another 5% or so. I feel like if we push to new all-time highs from here, we've just had actually a pretty major cycle low in the chart over the past few weeks. Or if I was to just zoom into the SP 500, we've had a couple very significant cycle lows, which they don't show on this chart, but we had a multiple time cycles bottom out here, which was just a few weeks ago. We also had that happen over here. we had it happen over here, and we had it happen over here. So I think the markets are primed and ready to have one more push up, and then I think we could run out of steam. We've had a really good correction, and now we got a nice bull flag pattern here. This whole pause is actually building up energy that if it breaks to the upside, we're going to see a nice run. It's going to suck a lot of people into the market. It's actually very similar to this one, where you have a big pullback and then you have a bull flag. And then, of course, it ran higher. We had the same over here. It pulled back. We had a bull flag. It had a little bit of a shake up here with some news and Trump and stuff. And then it took off to the upside. So the markets are primed and ready for another leg higher. Yet a lot of people are moving temporarily here.
Gold remains the safest investment amid economic uncertainty, with a potential upside of $3,500, while silver offers volatility and future buying opportunities. The stock market is nearing a peak, with one last rally possible before momentum fades. Investors should prepare for a potential financial reset and consider safe haven assets like gold. Given current market conditions, how do you see gold and silver performing in the next 6 months? Will the stock market's potential topping phase lead to a significant correction or a temporary pullback? Share your thoughts on Chris's insights in the comments below. Also, remember to like this video, subscribe to the channel, and turn on post notifications to stay updated with more content like this. See you next time.